We're into the middle of June, and that means we've got the May statistics for the greater Philadelphia area, and I'm going to tell you exactly what's happening in the market and what buyers and sellers should be aware of as they head into the summer months. So if you get some value out of this, you like what you hear, or you need help interpreting all this, you can subscribe to the channel. And if you want to talk to a live person, a local expert, you can do that with the link in the comments from our highly skilled, highly educated team to help you navigate all these real estate market conditions. We've got the May housing numbers. It gives us an idea where the market's been, and we can also forecast where the market's going. So let me share the statistics with you. Closed sales year over year in the greater Philadelphia area, so this includes the city of Philadelphia, the surrounding counties, as well as parts of South Jersey and Northern Delaware. This is the real metro area. Closed sales are up 0.5% year over year. So closed sales are basically flat. Median pricing is up 5.6% year over year. So we're seeing that prices are continuing to rise. Median days on market is 14 days. That's up 2 days from last year. Last year was about 12 days. So we're seeing that number jump up a little bit. We're seeing new pending sales. And this kind of tells us where the market's going because these are the homes that are under contract but haven't closed yet. And mind you, in the months of April, May, and June, these homes aren't all settling yet, but we do see the bulk of the real estate activity go under contract in the second quarter. Pending sales are down 1.5%. So sales are basically going to be flat, coming off a very low level, the lowest levels we've seen since the mid-90s. We're seeing that new listings are up 1.2%, but the number you want to pay attention to is active listings. Active listings are how many homes are sitting on the market right now, and that's up over 15% year over year. There's 15% more homes for sale than there were this time last year, which is incredible news. The supply is up to a 2.17-month supply. That's up from a 1.92-month supply this time last year. And again, it's up about 15% year over year. And showings are down 5.2%. So what I'm seeing here is sales are flat. There's a little less competition. There's more inventory, and prices are continuing to rise, and homes are still selling very quickly. So we see rates, they're kind of settling in that high 6% range. We're seeing like 6.92 on the 30-year fixed, according to Mortgage News Daily. They've been hovering around 7% for a while. So what does all this mean? Well, what's clear to me is rates are not going to be going anywhere. The Federal Reserve has been pretty clear. They're looking at the job market and they're looking at inflation, and it doesn't look like they're in any rush to cut rates. And until we see the jobs numbers soften, which is not a good thing, I don't root for that for anybody, rates are likely sticking around this 7% range. So the rates aren't going to be changing. There's opportunity here for both buyers and sellers if you look closely. For sellers, what I'm seeing, inventory's rising, and it hasn't shifted to a buyer's market. We're seeing a 1.92-month supply to a 2.17-month supply. That's up 15%. And even market's about a 6-month supply. So there's still low competition for sellers. Now, some pockets of the market, some neighborhoods, some condo buildings, some communities, they've got more inventory than a lot of other places. So you've got to get a local analysis done. Obviously, we're looking at the metro area here and giving you a large view. And it's a local view, but there's going to be different neighborhoods in Chester County, Delaware County, the main line, in Philadelphia. Hopefully you understand. And especially with condos, it's a little bit of a different market versus single-family homes and townhomes and row homes. So you've got to get a local analysis there. So we're seeing for sellers is there's not a lot of competition and prices are still rising. So that means if you're thinking about making a move, you probably want to get out there before inventory balloons anymore. Now, for buyers, knowing that rates are going to be about what they are, the advantage here and the biggest improvement I see is with competition. Showings are down 5.2% year over year. So that means there's less buyers in the market than there were this time last year. And when you see inventory rising, it also means you got some more choices. So you can't control the rate, and you really can't control who's going to bring their home to the market. What you can control are your strategies. So if you're a buyer right now and you're seeing a home that's on the market more than the median, which is about 2 weeks, well, then I'm looking at that home as an opportunity to make an offer. And that's where a really great agent can advise you. So get a local analysis if you're a seller and you're thinking about moving. The real reason to move is because it's right for your family and it's the thing that's going to make sense for you and your household. And for buyers, it's the same thing. The right time to make a move is when it's right for your family, the timing's right for you or your household. You like the home, you're going to be there over the next 5 years, and you can afford the monthly payment. So you've really got to determine what your needs are first and foremost, and then interpret this market data to find the opportunities to get what you want, whether it's a great new home or getting your home sold. And that's exactly where a professional can help you.